All right, what's going on, everyone? Hope everybody's had a good weekend so far. We're back with the weekly recap outlook video. Continuing prayers going out to everyone that's involved in Hurricane Ian, and let's get into it. All right, we had some economic data come out this past week, some big ones. So I just wanted to kind of cover some of that. So we had a surprise in the CV consumer confidence when it came in at 108 versus the 104.5 expected. We saw a drop in on the stock market because data came out actually stronger than we expected. Very surprised. So I just want to kind of talk about this a little bit. This just kind of instills that the good news is still bad news for the economy. If you haven't been following my updates, just kind of elaboration on this. So good news for the economy puts less pressure on the Federal Reserve because they can see that the economy is doing a lot better, so they can continue to rate hike higher. So if this data would have came in lower than expected, we could have seen possible more pressure on the Fed, and the stock market could have rallied a little bit more. We also had GDP number come out this past week as expected at negative 0.6%. This kind of just cements that technical recession. Actually, some economists actually say that we're in a recession right now, but if you listen to some of the Fed officials that have spoken the last week, they're actually saying that, an actual recession is still up in the air since the labor market may be tight, but the data is still showing some serious strength. Main headlines, though, on this past Friday was core PCE. Core PCE numbers came in hot. If you do follow my daily updates, you'll know I've spoken many times. The Fed watches the core PCE numbers way better than the CPI. Reasons for this is because CPI numbers come in with food and energy. These are the most two volatile in pricing. The prices for energy and food right now can go crazy. It can go high, it can go low. So you can't really get a better actual firm data understanding of what inflation is at based on CPI data. But if you look at the core PCE data, it excludes those. So it's a better, more firm understanding. You don't have those volatile prices going on in there. So that's why the Fed watches this. It came in a lot higher than we expected based on that foreshadowing on some of that Thursday data that we came out. We also had the Michigan consumer sentiment come out. It came in lower than expected. So, like I said, good news is bad news. So on Friday, we had some of that crazy whipsaws, but it was mostly flat until like the last hour of trading. This could be due to investors trying to decipher some of that data. We had core PCE that came in hot. Anything that includes inflation, you can cancel the good news as bad news. If it comes in hot in inflation data, it's hot. It's coming down on this. The stock market's going to go down. Now, Michigan consumer sentiment came in lower than expected, which means bad news is good news for the stock market. So you kind of had that mixed readings on Friday, which kind of saw that really good swings, though. So it was great for some intraday trading. All right, some other news that I kind of wanted to bring up. So we had Meta, or previously known Facebook. They freezed hiring and warnings of restructuring. So this kind of tanked Facebook or Meta. We have multiple tech companies coming out now. They're saying that they're forced to cut headcount in the past few months to prepare for a looming recession. This could just be some of the Meta just trying to possibly kind of foreshadow or try to get their company just in case ready, kind of like we've seen in Tesla, kind of going ahead and start getting some layoffs and everything, trying to save some money. But what really caught me was Mark Zuckerberg's comments. He said, "I had hoped the economy would have clearly stabilized by now, but from what we're seeing, it doesn't yet seem like it has, so we want to plan somewhat conservatively." Like I said, this could just be Mark Zuckerberg just trying to prepare, since Meta and their revenue hasn't been really the best lately. But I just really wanted to include that. Just everybody keep an eye on Meta. Could be some higher volume this week is going in. Could be some great intraday swings. All right. I want to talk a little bit about Apple. Apple had some crazy news come out this past week, which really included in some of them moves in SPY. So, Apple reverses plans to boost iPhone 14 production this year after demand falls. So, I don't know if anybody knows, but just a little bit of a recap. The iPhone in general for the Apple makes up more than the half of the entire company's revenue. So, if you're going to trade SPY or the NASDAQ or any of these other ETFs, you really need to know what's happening in these top 5 to 10 holdings. Because mainly, you can be watching SPY, you can be looking at the technical analysis, but if you're not keeping up with those top 5, 10 holdings, then you really need to be just trading one specific stock, because ETFs, that's all it is. It's just a makeup of a giant the top 500 companies in the entire stock market. So, Apple makes up the biggest in the S&P 500 and the NASDAQ. I have over here on the left the weighting. So we have S&P 500 is weighted as 5.9% of the entire S&P 500, and the NASDAQ at a whopping 13.77%. The NASDAQ's more just because the NASDAQ is more tech heavy, but I just wanted to put out these numbers just to show that if Apple pretty much tanks, then you very well could see the entire stock market pretty much kind of tank along with it. Now, some other headlines that we had come out this past week. Bank of America Securities actually downgraded Apple from buy to neutral with from 180 price target down to 160. This was also very bearish news based on most of that demand fall. And then there towards the end of the week, I had the Apple executive Tony Blevins leaves after crude remarks went viral. So, as if Apple wasn't kind of getting hit hard, we also had the executive kind of taking a hit there too. So, I just really wanted to throw this out there and just remind everybody that if you're trading an ETF, you really need to be making sure and we're keeping up with the news and data that's coming out for the top 5, 10 holdings, especially Apple, since it's the top heavy weighted. Now, so what does this mean for the future stock market? If Apple continues to see that demand fall on their new iPhone 14, then very well could see pretty much a fall in the stock market continuing going on into the future. All right, so we had some economic data come out this next week. I just wanted to kind of list some of the big ones that I'm kind of watching for this week. We have the ISM manufacturing PMI forecasted at 52.2. This previous month was 52.8. I gave a little bit of a description in case you didn't know exactly what this manufacturing PMI numbers are. Wednesday, we also have the non-manufacturing PMI numbers coming out, and then Friday, we have the non-farm payrolls and unemployment rate. I'm mainly watching for the Friday numbers, but of course, Monday and Wednesday, the manufacturing numbers, if these come in lower than expected, this just means more supply and demand. The supply chain taking a hit still, and we can easily see this in this data. So if the supply chain's taking a hit, then we very well can see the stock market go up because it's putting pressure on the Fed. So I just wanted to kind of give a little bit of a recap on this past week, and then now this economic data that's coming out this week, we very well could see non-farm payrolls. You see right now forecasted at 250,000, then last month was at 315. If you see higher in non-farm payrolls, expect the market to take a dip pretty hard. Just mainly because you're adding more jobs, which just means pushing on to the Fed saying that the labor market is even stronger. It's getting stronger. It may be very tight. It may be very vulnerable, but the actual numbers and data that's coming in showing that that the labor market is just super strong. Now, unemployment rate, I don't expect it to change much, just basically mainly because of the jobless claims that are coming out. All right, now looking at technicals here, I just wanted to kind of a little bit of a recap based on some technical analysis. Of course, you can't really just look at the SPY or the NASDAQ, like I said earlier. You really want to look at the top 5, 10 holdings, but just looking at a very broad aspect here, we saw the S&P 500 dip below the all-new time low for this month, for this year. If you look at the MACD, super oversold. So we very well could see a pop, but like I said, the Federal Reserve has no expectations for this next rate hike, so everything is data driven. This just makes this economic data that comes out that much more important. So if this economic data comes in and it keeps on coming in lower than expected, which means that the economy is taking a hit, then you very well could see the next bear market rally. Now, I'm still very long-term bearish, but I really think that Q4 and I think Q3 earnings might be a little bit mixed. Just basically, you have to give the inflation data and everything really time to really sink in for these companies. But I think Q4 might be pretty bad for the companies. But short-term looking, we're very oversold on the dailies right now. So we very well could see a pop or a bear market rally. Looking at the SPY 45-minute time frame, you can see here we tried to come up and try to fill that gap fill, but without any luck, we couldn't really get all the way through it. So if you look at the stock RSI, these are mainly the two indicators that I really use, MACD and stock RSI. So if you look at the MACD, we've already crossed bearish, and we couldn't get back up on the couldn't cross back up on the green. So on the stock RSI, we're slowly coming back up, but like I said, everything's very data driven right now. All right, looking at the NASDAQ, we hit a new low for the year as well. Not looking good at all. Keep an eye on this top trend channel. If we do get a bounce, expect this to be heavy resistance. We couldn't break out 1, 2. We broke out on the third try, but it was a fake breakout, and then we continued to fall back down after that CPI data came out. So just keep an eye on this top trend channel as it continues to be major resistance. Now, looking at Apple, not looking good at all. We can see right here on the MACD, we were getting close to possibly the 12 crossing that 26, and we had a fake, tested it and then fell back down. And if you look, you can see some heavy selling right here on these bars. So Apple, of course, not looking very good, but like I said, usually when bad data comes out, people usually take advantage of this and possibly see this as a buying opportunity and try to buy some of that dip. So let's see if Apple can catch a bid, some support this next week, and then see if it can kind of bounce. Now, mainly what I'm looking at is the DXY, which is the US dollar, and VIX, which is the volatility index. So US dollar, we have the daily here. Daily MACD, it's actually coming down. So expect some more downward pressure on the US dollar, which could actually push more of a bear market rally, kind of that emphasis on there. And we also see on the MACD that's actually the 12 is about to cross bearish over to the 20 on the 26. So that just kind of gives more of an emphasis on possible bear market rally. But like I said, everything's data driven because we saw that data come out, PCE data and everything come out, and we saw that spike on Friday there on that green spike. So if that data comes out that's good for the economy, expect that US dollar to continue to run, especially since the U.S. economy is probably one of the best economies in the world right now, especially in dealing with inflation. So the volatility index, or VIX, we had a breakout here on this daily chart, on this main resistance that I was watching, and we came back down and retested it, but actually caught some support there. Now, mainly watch this resistance or this support here that was previous resistance, and then also this uptrend channel that I have. So these two levels are going to be main support, but on this daily MACD, overbought, major overbought. So we could possibly see some cooling off here, which could emphasis on more on that bear market rally. I was actually hoping that once we hit that all-time low for this year, I was actually hoping we could catch some support, but we continue to see that sell-off as we had that core PCE data come out. So these are mainly the levels that I'm going to be watching for this next week. If you follow my daily updates, I continue to put out there. We have the put wall right now for the S&P 500 at 350. So just keep an eye on that. Expect major support at 350. We could possibly see just a little bit more selling going on, but I think very shortly we may have even the smallest bear market rally. That's, just remember the stock market just can't be a straight sell-off. I mean, you're going to have little waves and you're going to have bigger waves in the middle of that. So if you enjoyed this video, please don't forget to like and subscribe. Just continue to follow my daily updates if you follow those. Everybody continue to have a great weekend, and just continue to pray for Hurricane Ian and everybody that's involved. Thank you everybody for watching this video, and just everybody have a great weekend.